You've heard the buzzwords: Bitcoin, crypto, blockchain. It feels like a new financial world.
It promises transparency and convenience. But what is it, really?
If you're between 20 and 45, you grew up online, yet this can still be confusing. We'll explain it without jargon. We'll cover the essentials: what crypto is, how it works, what it's used for, and the real risks.
Think of cryptocurrency as digital money.
It's secured with advanced cryptography, making it extremely hard to counterfeit.
Its most important feature is decentralization.
Traditional money is controlled by central banks and your account by a private company. Crypto runs on a distributed network.
That makes it transparent and resistant to censorship. That's why it appeals to many. A new way to pay, save, and invest.
The story begins in 2008 with Bitcoin, introduced by Satoshi Nakamoto.
The big idea: peer-to-peer electronic cash. Send value directly, without banks or middlemen. Today, it's still the king of crypto, famous for volatility, and the most recognized digital asset. This is where you hear the word blockchain.
Imagine a digital ledger, like a shared spreadsheet, copies kept on thousands of computers.
When a transaction happens, it's recorded in a block.
That block links to the chain of all prior transactions.
Once added, it's permanent. No one can change or delete it.
Everyone can verify transactions, but cheating the system is very hard.
This tech is useful beyond money. Supply chains, verifying digital art, even securing medical records. It's not just Bitcoin. There are thousands of altcoins. Ethereum is more than money. A global, open-source computer for apps and smart contracts.
Smart contracts are self-executing agreements, code that runs automatically.
XRP focuses on fast, low-cost cross-border payments for institutions. Stablecoins track real-world assets like the US dollar, reducing volatility inside crypto.
So what are people actually doing with crypto?
Investing and speculation. Many buy hoping prices rise, like stocks or gold. Payments. More online businesses and some stores accept crypto. International transfers, often faster and cheaper than traditional banks.
Decentralized finance. Lending, borrowing, trading without middlemen.
What really moves the price? Supply and demand. If buyers outnumber sellers, price rises, and vice versa. Public adoption. The more people and businesses use it, the more valuable it tends to become.
Government regulation. Friendly or hostile news can swing prices overnight.
This is crucial. Crypto is high risk, not a get-rich-quick scheme.
Extreme volatility. Double-digit moves in a single day are not unusual. Security risks. Exchanges where you buy can be hacked.
Wallet risks. Understand the difference between custodial and self-custody. If you don't hold your private keys, you don't truly control your coins.
Beware of scams, phishing, fake apps, and unrealistic promises. Regulatory uncertainty. Rules may change and affect value or legality.
Rule of thumb: never invest more than you're willing to lose.
Start small. Learn first. Invest later.
Do your own research. Compare multiple reputable sources.
Best practices: use a hardware wallet, enable 2FA, and store your seed phrase offline.
This is educational content, not financial advice. Crypto challenges old ideas, huge potential, and real risks.
Understanding the basics is the first step. Subscribe and continue with the next video.